Hello traders, Gary Wagner here. It is 11:46 in Honolulu, 4:46 in New York on Tuesday, 16th day of January 2024, and this is the daily report for gold and silver. Although multiple Federal Reserve officials have been addressing information on when they expect to cut rates and how deep they expect to cut them, it was Christopher Waller, one of the Federal Reserve governors, that sent into motion a tremendous upside move in the dollar and decline in both gold and silver. The dollar is currently up 0.75% and fixed at 103.353. As you can see from this daily dollar chart, we had identified a potential area of resistance with this bottom here as well as these series of tops. What happened today put that to rest, and what we saw was a gap from the closing price yesterday at around 102.58 to an open today of 102.303. The dollar index is currently fixed at 103.358. Dollar strength as well as higher yields on U.S. debt instruments really took gold dramatically lower. When we look at the net change, we have February gold currently down $19.80 after trading to a low today of $2,027.60. It is currently down by 0.96% at $2,032. Silver also gave up substantial ground, declining by approximately 1.05%. That's a total of 24.5 cents, taking the most active March contract to $23.08. We're looking at a daily candlestick chart of gold futures. We can see that gold definitely broke below a key level we've been looking at, 2033, the 38.2% fib retracement. We want to watch how gold trades at this particular price point, but we want to focus intently on what the dollar does, because the dollar was up by 0.75%, gold was down by 0.97%, so the vast majority of today's decline in gold is dollar strength. If the dollar continues to move higher, we could see gold continue to trade under pressure. And if dollar strength continues, the price point we would want to look at for technical support occurs at roughly $2,015 to $2,020, which is based upon this lower trend line from these lows, the first one in November and the second low occurring mid-December. If the dollar continues to gain strength, and we do not have technical support come in at this lower trend line, major support occurs at approximately $2,000 per ounce, which is a very important key psychological level, and it also corresponds to a 50% retracement. We are currently flat with no active trades in gold and will remain on the sidelines trying to determine whether or not market participants are focusing on the Fed and whether or not rate cuts will occur earlier or later, as well as keep our eye on any potential flare-up of geopolitical tension, because that would immediately be highly supportive of gold. Because of the fact that it was dollar strength today that had the largest effect on gold prices moving lower, I want to take a closer look at the dollar. We spoke about the fact that these tops that came in short term as the dollar trades sideways was really taken out today with that strong price gap, which was followed by a strong price gain today. In terms of levels that we want to watch, when we look at the 50% retracement, which comes in at 103.42, when we look, we can see that there really wasn't much importance technically. We're looking for highs or lows, with the exception of this high that occurred back in June of last year. We do see a top come in mid-December at 104.30, and that also corresponds to another top that occurred in May of last year, which suggests that major resistance does not occur till 104.30. 0.35. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.